Hey everybody, welcome to Mortgage Today for Thursday, July 11th. For Thursday, July 11th, 2024, and oh, what a day it was. UMBS were up 41 basis points in the first hour of trading. S&P futures were down 9.5 points. We came in with a headline CPI month over month, came in negative 0.1 on a 0.1 forecast. It was 0 previously. Headline CPI year over year came in at 3.0 on a 3.1 forecast. It was 3.3 previously. Core CPI month over month came in at 0.1 on a 0.2 forecast. It was 0.2 previously. And then that core CPI year over year came in at 3.3 on a 3.4 forecast. It was 3.4 previously. Pretty straightforward outcome here. CPI was high stakes, and this was quite a bit lower than expected. Bonds are rallying about as much as you'd expect in the morning, though they gave some back in the afternoon. Energy prices fell overall, which was offset by increases in shelter. Used car prices were down 10% on a year-over-year basis. Food index increased 0.2% in June after rising 0.1% in May. September Fed funds futures now see an 80% chance of a rate cut at the September meeting. The U.S. trade deficit steadily improved on a monthly The U.S. trade deficit steadily improved from a monthly high of $102 billion in March of 2022 to $60 billion in 8 of 23, and the improvement unsurprisingly boosted GDP growth. Since then, however, it has worsened in 8 of the last 9 months and now stands at negative $75 billion. The worsening trade deficit reduced 2024 Q1 GDP by 0.65 of a percentage point, and the 2024 quarter 2 impact is likely to be meaningfully worse. Today's CPI was hotly anticipated, to say the least, and it did a borderline heroic job of advocating for a huge drop in rates. Not only did the core month-over-month number drop to an unrounded 0.65, which implies core annual inflation under 1%, but shelter inflation dropped to the lowest level since the start of the pandemic, roughly in line with the bottom of the pre-pandemic range. Those ingredients would have allowed the market to cook up a much bigger rally than we saw today, even though we saw the second biggest mortgage rate drop in 2024. The slower pace is more sustainable. A slower pace is more sustainable. Markets want to do things right this time. UMBS ended the day up 22 basis points at 100.92, which is down 18 basis points from the high on the day. So ending at 100.92, that is putting us up above this Fibonacci line. So we finally broke through that Fibonacci line, which we actually went through the 101.08, but retreated back down to right at that 100.911. So there must have been a bunch of sellers saying, okay, yeah, no, we're taking it back down to that technical level. So we'll have to see what happens tomorrow.